Welcome to Profiletraders. This is Reza and you're listening to my market analysis for March the 30th. We are looking at a chart of the S&P Eminis futures here, and we are going to look at a daily chart first to see a little bit what's going on big picture, and then shift into the smaller picture. So last time when we looked at this chart, I pointed out a couple of things. One, that the main trend line up was violated with a breach and a break of a big red candle down, and that was the day when we discovered that the healthcare law did not pass, and therefore casted doubt on the future of Trump's agenda. Then what I said is that after the uptrend line was broken down, we were able to have two contact points here and here to draw a trend line down. And I told you that there was a possibility that if we were going to come up and break through 2350 to 2355, that the market would then come for a test of this third 2365 level. And if by this 2365 market wasn't going to reject, then we were wide open to go towards 2377 to 2380, which will then be the touch of the main trend line down. And after having come up from 2320 all the way to 2380, a 60 points rally, that level should provide significant resistance. Now, why did I say that if we do break past 2365, we should go towards 2377, 2380 is because of this. This is the same chart but on a profile basis. And as you see, the 2355 to 2350 was selected on the fact that right around this area here, that's where we had all the singles from that big day where we dropped. And usually when price is allowed to enter into these single and double zones, market has a tendency to retrace them. As we can see, since that 55-57 at first wasn't defended, price has been allowed to come to 2365 this morning, and now we close slightly below it. If this level now doesn't provide resistance, most likely we are going to go towards 2370, and then after the 2370 we are going to go delete entirely this whole zone, and the top of that zone will be at 2378.75, where you can round it up to 2380. At 2380 we will be touching the current existing trend line down. So we shall see what is going to happen, but two things to keep in mind. One, tomorrow will be the end of the quarter. Two, we are also entering the earnings season. Normally, when you enter the earnings season, especially ahead of it, if the market is oversold like it was on the 2320 level, they buy it ahead of earnings. And usually they buy it all the way into the middle of the month until the big numbers are out, and then they start to take some profit. Obviously, market is unpredictable with certainty. It is possible that this time they sell into earnings, or if they're gonna come and repeat the pattern and buy it into earnings, I do not know. All I know is that 2380 is my next level of resistance, and if that level starts to reject down with another nice red candle down with a good range into it, that will signal to me that market is about to reverse from this short term pushing up into coming down in the next days after that. For now, the level of support that we should be monitoring very carefully is 2360. If 2360 breaches, it leaves wide open for all this underdeveloped area of the profile to be targeted. Then we should drop to 2353 or so. 2353 or so breaks, we should then come to 2348. Any given time that 2348 and a half or 48 even breaks, market will be wide open to correct this area, and then we should drop to 2334. But for now, based on how we closed, everything is looking bullish, everything is looking strong. For the first sign of weakness to show, it should be up on a break of 2360. Till then, we should see continuation up. Now for crude oil, also last time we looked at daily chart, I very much so warned you that we are encountering support, especially it was support coming in at the main trend line up. We had a double bottom retest of 47 which held successfully, and an oversold bounce was definitely due, and we have seen the oversold bounce coming in, especially that this week oil reserves came out and it showed that a little bit of a shortage was around, which was bullish for oil. Therefore we saw a very nice bounce. Now what should we expect? Well, based on what took place today and where we closed, obviously it's in a very short term bullish uptrend pattern. In order for a break to happen, we need to break the bottom of the current rotation up here below 50, 50.08, 50.10. If I was going to round this up, I would say 50 is the main level of support. If we breach that, downside target could become 49.58, the POC below that. After that, 49.25, 49, 48.70, and then the low here at 48.38. On the way up, when you're at a 50.50, as we were almost there this morning, next level is going to be 50.75, and if we break that, there is a POC which could be targeted up there at 51.15. Once we do reach there, I doubt that, since we have been coming all the way from 47 to 51, which will be $4 of a rally, that market will have much of an energy to break that level. So that level is considered as a main level of resistance. So let's see what happens, but tomorrow will be the end of the quarter, and next month will be the start of the earnings season. As usual, thank you for listening. If you wish to learn market profile, check my website. You can get all my 5 courses, 1 year to my trading room for a fee of $550, 30 days money back guaranteed. Good luck, and to the next time.